Right, good afternoon, everyone. All protocols observed. So, as Crystal would have indicated, we did have a survey whereby we asked persons that are attending today just to fill out their views and their outlook for various capital markets, both locally as well as internationally. So, just going to walk through the results. Of course, it's not an indication of where the markets are going to go. It's just a summary of the results and your responses from the survey. So first, we're going to look at the domestic market. So the domestic stock market, actually can't see it from here, but you'd notice that in terms of the responses, that it is expected that the stock market will decline, with the majority of responses signaling a slight decline followed by a significant decline. So you'd see that, I could take a point from here. So that's to the left here in terms of the domestic stock market expectations, with a very small percentage expecting an improvement here at 4.44%. In terms of those sectors that will outperform, you notice that the banking sector, persons expect that to be the strongest performing. A large number of persons expect that. Of course, this also may reflect, again, I'm not making deduction, I'm just sharing your responses. This does reflect, of course, the fact that the banking sector does represent a large part of the stock exchange. So it is interesting that on one hand, we do expect a decline, and on the other hand, of course, we expect relative outperformance from the banking sector. Of course, as I also go through the responses, as you make notes for yourself, of course, also, even when you meet and discuss after, it'll be nice for you all to discuss what you think also of the responses, because we did get 45 responses. I do see more than 45 persons here. So, of course, as you meet and you interact with persons, it'll be nice for you to also share your views on this. So we did have a question in that we did look at the expected change in the yield curve. But before we go through that, I just thought it might be useful for us to look at the changes in the yield curve just across the past 3 years, in terms of what the shape of the yield curve has looked like over that time period. So in terms of the expectation for the yield curve over the next, the expectation over the next year is that it'll remain unchanged, right? That's the largest response, but very close in second place is there is an expectation for that flattening of the yield curve, which we have seen to some extent here in that the shorter term rates have been growing at a faster rate relative to the longer term rates. So there is some of that already being reflected in the current yield curve. Coming in after that, there's an expectation for a steepening of the yield curve. And lastly, around 10% of respondents expect the yield curve to actually invert. And then just looking at the impact of these changes on investment strategies, the majority of persons did indicate that they expect this to have no impact on their investment strategies. Persons did expect, secondly, to have a significant positive impact on their strategies. Now, we didn't ask for persons in terms of what type of strategy they do employ, whether or not these are fixed income managers, pension plan managers, mutual fund managers. That in itself may have added some color here. But in terms of the overall strategies, for the most part, persons either don't expect there to be any impact on their strategies, or there to be a significant positive impact on the strategy. All right, one of our favorite topics right now, in terms of the FX market. So we did speak about and ask about the TT to US expectations in terms of that exchange rate. So this was interesting in two ways. So firstly, there's that expectation that the exchange rate will not change. But secondly, we have a tie in terms of the moderate appreciation of the US dollar, while there's also an expectation for moderate depreciation of the US dollar relative to the TT. Again, I just here speaking on the results, right? This is not Pernel Roberts giving his views. And then lastly, to tip the scale in one direction, there's a small portion of the respondents, that expect there to be a significant appreciation of the US dollar relative to the TT dollar. So here we have a couple questions and a couple responses that are relating to the T&T economy. Just want to confirm. So in terms of the majority of the responses, there's that expectation that the TT economic outlook for it to be flat over the short term. Secondly, there's a large portion of the respondents that expect there to be a negative negative growth in the economy. And lastly, 9.76% of the respondents expect a positive outlook for the economy. Of course, we do note that this morning the IMF did publish their updated outlook for the world, for the US, and of course for Trinidad and Tobago also, and that they do expect the TNT economy to grow by 2.37% this year. Again, I just stated numbers. I know that this is presentation is very close to a key event in our politics, but it's just the timing is happenstance. In terms of the confidence in the local economy, a large portion of the respondents at 51, so more than half of the respondents did express no confidence in the local economy. On the flip side, those that are confident and very confident represent around 20% of the responses. Again, the responses that we receive are just 45 out of all of you. So it's not representative per se of the population. Right, so we're going to move forward to the US and global market. In terms of the US stock market outlook, so we know the US stock market has been in a very volatile state. So in terms of the expectations from these respondents, this would have been completed last week. And between last week and this week, the market has moved a lot, right? So in terms of the expectation is that there's that, firstly, a neutral outlook, and that the market will be in the range of negative 5% to 5% for this year, while the second place, the second largest set of respondents would have indicated they expect there to be a bearish tone to the year between negative 20 and negative 5%. While in third place, persons expect there to be a whiplash, I guess you can say, and that the market will return to a strong positive performance between 5% and 20%. So here we have some of the sectors that persons expect to outperform in this year, but technology, interestingly, representing the largest portion of that, followed up by defensive sectors, such as healthcare, utilities, and then of course we had financials, energy, industrials, rounding off the top 5. Everyone can see and is following. Everyone's good? Nice. So in terms of the US, in terms of their interest rates now, the expectation for this year is that there'll be a moderate decrease in interest rates in the US at 25 to 50 basis points. And between second and third, there wasn't much of a difference there, but persons are expecting an increase of 25 to 50 basis points at 7.67% of the respondents. And then you have above that, I just lost the presentation. You have the significant decrease and, of course, no increase in interest rates, just moving up. So in terms of the US interest rates, we have the impact of US interest rates on the domestic bond market, and then we have also the impact of that on the investment strategies. Sorry, it's going to pull back up the presentation. Yeah, sorry about that. So in terms of the expectation of the impact on the domestic bond market, so that relationship between, of course, the US interest rates and the TT interest rates, and that there's an expectation that there'll be a slightly negative impact on the domestic bond market, followed by no impact. And then thirdly, there'll be a significant negative, slightly positive impact, on the impact of interest rates on investment strategies. So the largest would have been a slightly negative impact, followed by a slightly positive impact. So again, the results weren't always forthcoming in terms of like a strong view among all of the respondents, and again, reflecting that uncertainty that we see. Within this first quarter, the first year, the first half of the year, there has been a lot of uncertainty, and that is also reflected in the responses where we see the first and second actually conflicting with each other. So just to wrap up the presentation, we asked respondents about the key risks that they see in this year. And the largest by far would have been geopolitical risks, followed by market volatility, and then third and fourth, we have the economic downturn, as well as, lastly, regulatory changes. So again, thanks again for those that would have participated in the survey, and it would have yielded some interesting results, particularly on the local side. And yeah, we're looking forward to a continued discussion revolving these various asset classes today from our key speakers and, of course, from you. So thank you very much.